Welcome to Kitco News. I'm Neils Christensen. We're here at the Silver Gold Summit in San Francisco. Joining me today is Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors. Thank you very much for joining
Bonjour,
us today.
comment ça va?
Ça va bien. Oui. That's about as good as my French gets. So today is the start of Diwali. So I wanted to talk about the love trade. From my perspective, it doesn't feel so lovely. You look at some of the stats, imports at a 3-year low. Some of the reports I've heard from sales are down 20%. What are your thoughts? I mean, is gold interest in India still alive?
You know, I've been hearing this for over 30 years since I've been living in Texas. And all of a sudden news comes out that gold was basically coming across the border in trains and planes and automobiles. The cultural affinity to the consumption of gold is far greater than we appreciate. And somehow that gold is getting there. And the most important factor is the GDP per capita. The rising GDP per capita is the strongest correlation to increasing consumption.
The growing middle class.
The growing middle class. They're also very important for global travel. When you take a look at the significance of America, now we're seeing who are the biggest tourists in the world. Who? Chinese. You know how bullish this is for the rest of the world for peace? When they come over and they see the standards, they're in Europe, I was in Salzburg, it's dominated. New York Stock Exchange is dominated. So I remain very bullish from that end, and they buy gold. And they buy gold, and especially in China, if you're the year of the ox, you get a golden ox. If you're year of the tiger, you get a golden tiger. The idea of gold is very significant for me, for cultural wise, and it still is 60% of all the trade for demand.
Well, I was going to say, so that's what you're talking about today at the Silver Summit, was these sort of macro factors, the Chindia still having an impact on the gold market.
It's so funny to me about these, where President Clinton years ago said, follow the trend line, not the headline. So the headlines are so pervasively negative, and the stock market is going to new highs. Now let's take a look at Chindia. China and India affectionately is known as Chindia. They are 40% of all consumption in the world. There's an ETF in the US called Chindia, but what's important here is this ETF has outperformed, it's equally weighted China and India, ADRs in the US. It has outperformed the S&P in the past year. It's up 22%.
Wow.
S&P's up 15.
Wow.
Gold's up 16.
Yeah.
All right, so the headlines have this sort of real biases everywhere, and it's how do you get through all that noise. So I really share with you is that the correlation, and let's go back. 30 years ago, Pierre Lassonde talked about that Chindia consumed 10% of the world's gold. Today, they're 53. Now, what would stop that would be GDP per capita if they start to decline. But the GDP per capita continues to grow. You know,
China come out and defend the 6% GDP growth. Are you worried, though, that, like the talk of global recession, talk of economic slowdown, what impact would that have on this? I mean, do you see that as an issue?
Bad news is good news for you. Get that, young man. Get that. Remember that. What happens every time is it's a bad data point. Rates fall. Rates have fallen below the ice. They're below the water. It's freezing down there. Negative real interest rates. In Denmark, they pay you to take out a mortgage. I share with you is that there's something else that's very different in this cycle. I've never seen where the imbalance between governments' fiscal policies and monetary policies. The G20 countries, their finance ministers and their central banks are in collusion. They are a monopoly. Even though OPEC is supposed to be illegal, they function as a monopoly. Since 2008, they've gone from global trade and activity to synchronized taxation and regulation. Harmonization means raise our taxes and regulations to the EU. That was part of the Brexit fight. People want to leave EU because of strangulation by regulations. We're seeing it in North America with MiFID II. $1 billion of analysts have lost their jobs. Actually, it's good for Kitco because people have to come to Kitco to get information because research is getting more and more difficult to get. MiFID II didn't want conferences like this. So something that's really interesting that's going on. And so the regulations, there's no real backbone to streamline taxation and regulation. So they're using monetary aggregates, printing money, funny money, and because they're collusion together, there's no big wipeout. They all talk to each other. If we go back 30, 40 years ago, back to the 70s, there are all these different currencies, then all of a sudden there was differences in moving around. Today, the EU is a block. So what's going to happen, all of a sudden, one's going to leave, and then the domino effect is going to place. Gold in a New York second is going to be $10,000. No war. There's no war. This is just money printing on steroids.
So you're definitely not worried about the consolidation that we've seen in September. This is the time to buy gold then.
Yeah, I think it has gone. Let me think. The math says it was up 3 standard deviations. I remember I was on your program and I said it could easily correct here because it had such a big surge. It is now corrected back to the mean. So it could easily go back up. It really seems to now be tracking the percentage of government bonds with negative rates. So that peaked in August, the end of August. Gold peaked then. It's now come down the number of bond issuers. It's a Bloomberg function. So things are correlating with that. So as the rest of the world gets negative news, they drop rates, they force negative rates, then those number of bonds start to rise again. The price of gold starts to move with them. Wait till they start to default. Otherwise, it's just group collusion.
That's perfect, Frank. Thank you very much. Those fantastic comments. Thank you very much for joining us.
Happy investing.
Excellent. Thank you very much for joining us at Kitco.com. Stay tuned for more coverage from the Silver Gold Summit.